What's up everybody? Welcome to the Stocks channel. Today the stock market bounced off a very critical support zone and the bulls maintained the bull trend. First up, let's take a look at a daily chart of the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright. Today's SPY was up 0.59% and we did get a bullish bounce from the rising 20 daily moving average. And if you look at the price action, we closed right on top of the daily 5 EMA. And we do have a gap below because the bulls did gap it up overnight. So there will be a gap now right here at 511.7. Now looking at the chart, we did have decent volume today and the bulls held support. So obviously we are still in a bull trend. And this week on Wednesday, we will have FOMC, and there will be a lot of people talking about large moves higher and large moves lower, but I still think we're going to largely just stay in this range and really go much of nowhere, which means we could push as high as 517 to 520 and as low as 507. If we break out of that range, then I would definitely pay attention whether we break to the downside or the upside, because that will likely lead to another leg in this market. But until that time comes, while the indices are chopping around in this range, I still am going to tell you this is a stock picker's market. And if you're in the Discord server, you know exactly what I'm talking about, because we're catching very large moves on individual names while the indices go much of nowhere. This is where I believe you should be focusing your energy, looking at which stocks are moving the most and focusing on those right now. Because even I myself enjoy trading the indices, but there's really just not a lot of action or a very strong trend in the indices at this time. So focus on the stock pickers market theme. That's what we're going to continue to do in the Discord server. And while we're waiting for the indices to break out of this range, we can still make a lot of very profitable trades with very solid risk reward setups. On the NASDAQ 100 triple Qs, we were up 0.82% today, and the bulls did gap it up, and the bulls did hold that support at 437, so we didn't get any follow through with the last candle because we didn't break down below the low, and today we did break back above the high. So as I continue to tell you, this will continue to be a range, and this is still a bull trend on the daily chart, especially while the triple Qs are above 437. If we start breaking down below the support at 437 again, that will tell us the bulls are getting weaker, which is going to increase the probability we come down towards 428 and a gap fill at 425. So watch that level at 437, and as long as we're above it, it's possible we push to the top of the range between 445 and 448. On the Dow Jones, we were up 0.19% today, and the Dow Jones is down below all of the moving averages, so we need to watch that resistance zone right around 389, and there is a potential double top in play here right around 392 if we break down below this support at 385. Below 385, we could come all the way back down to 377, so that's a very good risk level for the bulls. And if you're bearish and we start breaking above 391 or 392, I would definitely get out of your short positions because we could push to 400 next. On the Russell 2000 IWM ETF, we were down 0.57% today, and we're still holding around this gap fill support right around 201, and we also have a very strong support just a bit lower at 199. So if you're a small cap bull, I would stay bullish above 199, but if we can't hold above that support at 199, I would start to get a little more risk off and look for lower prices. Below 199, we could retrace all the way back towards 190. On the ARKK ETF, we were up 0.27% today, and this ETF is struggling to hold this support right around 48, and if we cannot hold between 47 and 48, this will look like a double top that brings us back down to 44. If we bounce from this support and break the high above 51, we should start running higher towards 54.5 next. On the VIX, we were down 0.55% today, and the VIX continues to crush from that resistance at 50. And if you zoom out, I did talk about how we're making higher lows. So if at any point the VIX does start to spike out here and get above 15 and start running higher towards 18 and 20, I do believe that could be a very fearful market with very high volume selling. But until that happens, you don't want to assume it's going to happen. Wait for confirmation with the indices breaking support and the VIX spiking out, and then you can probably short the market lower. On Bitcoin, we're currently trading just below 68,000, and Bitcoin is fighting for its life to hold the breakout of support between 67,000 and 64,000. Remember, I told you in Bitcoin I thought we would likely reach a peak right around 74,000, and we are seeing some decent volume selling since we've hit near that price target, but we never fully hit the price target. So I'm not completely ruling out the possibility we do go all the way to hit the price target and then start to see high volume selling later. So I'm not saying this is bearish because we are holding support. And as long as we can hold above this support at 67,000, it is possible we make one more run for that price target right around 75,000. However, if we break down and this is a lower high rejection, then we are coming all the way back down towards 56 to 52,000. On Nvidia stock, we were up 0.7% today, and we are still building out this bull flag consolidation look, and I'll draw it out one more time where we're just kind of consolidating within this range. And I do think this is still the highest likelihood probability is that Nvidia is likely going to stay between this gap fill at 823 and this resistance at 933 until we get ready for enough energy to push us higher towards the next price target right around 1,000. I do think we're going to see Nvidia hitting 1,000 after this consolidation, so I still do think we are going higher. But the real question to figure out is, are we going down to fill the gap at 823 and then going to 1,000? Or are we going to hold above that gap fill and go to 1,000 now? So try to watch the price action within this range and try to get a clue on which direction the range breaks. If we break to the downside, look for the gap fill, and if we break to the upside, look for the price target higher right around 994. On Tesla stock, we were up 6.25% today, and this is one of those trades we absolutely nailed in the Discord server because we were loading up here at this support at 160, and we are looking for this higher price target right around 187. Now, should you hold your entire swing position to hope we go to 187? I don't suggest doing that because we are in a downtrend, so you should definitely be locking profits along the way. So this was a bullish day, and we could go higher next towards 183 and 187, but we do need to be cognizant that we are in a downtrend, which means this is likely still going to be a lower high within a bear trend unless we start forming higher lows and higher highs, which we need evidence from the price action. So if you're bullish, you can stay bull above 173, but if we break below 173, we do have a gap down here right around 165, and of course a strong support at 160 to 158. On Apple stock, we were up 0.64% today, but intraday we did push all the way up to the price target that I gave you at that gap fill at 177, and that was a great place to lock in profits. So obviously that's what a lot of traders did, and we did close down near the low of the day, and we do have a gap to fill, which may or may not fill, which is right there at 172.62. Now I say may or may not fill because if we're bullish, we could just gap up again tomorrow and continue to run, and that gap can stay open, or we're going to come all the way down and fill that gap and find buyers and then continue to push higher towards 179 to 182. So I do think Apple can go higher in the short term, but it is in a bear trend. So just like Tesla, I'm going to caution you against getting too bullish because below 177, we could still come down here and hit this price target at 167. And then this could simply look like a lower high before the next lower low within a bear trend. So don't rule this out. I'll leave the arrow on there for reference. But if we start breaking above 177, I do think we'll run higher towards the 180s. So jumping back over to the S&P 500, this will be a big week with FOMC on Wednesday, and FOMC is always a big deal, but keep in mind what I said about us largely staying within a range while this is still a stock picker's market. If at any point we start to see all of the stocks rallying higher or all of the stocks getting high volume selling, that should be what breaks us out of this range in the indices, whether that's bullish or bearish. We couldn't care less. We simply want to watch the price action and be on the right side of that trade. Remember, no bias. We don't care if we're going higher or lower. We're traders and we can make money going in either direction. So watch that range, which means you need to watch which direction the price action breaks from that range. And if you're trading the indices, just keep in mind they're likely going to remain choppy. I still think this is a stock picker's market, so that's what we're going to focus on trading in the Discord server, looking for the best trades at any given time and any given day. If you want to come trade with me and get access to all of my intraday updates and technical analysis, then you need to come join the Stocks Channel Discord server, and you can find out how to join the Discord server by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.